The risk of loss trading any financial instrument, such as Forex or binary options, can be substantial. You must be aware and willing to accept those risks in order to invest. Don't trade with money you can't afford to lose. This is neither a solicitation nor an offer to buy or sell any financial interest. No representation is being made that any account is likely to achieve profits or losses similar to the ones discussed here. Past performance is not indicative of future results. Any strategies discussed are for educational purposes only and are not to be construed as specific trading advice. This material is for educational purposes only. Okay, TraderBot Marketplace is not affiliated with Cantor Exchange. Hey, AJ, can you put your email in the little chat box? I'm going to put it up here. If you have any questions about Cantor Exchange, you can always email AJ, and I will get his email address up here in just a second. It's in the chat, and I'll put it right here. There it is. There's AJ's email. He works for Cantor Exchange. If you have any issues about Cantor Exchange, give him a holler. Okay, what are we going to be talking about today? Stacking OTM trades. Oh, and also before I forget, if you want to just call him on the phone. Uh-oh. Oh, there we go. There's his phone number. Just give him a holler. Okay. So today we're going to be talking about stacking OTM trades, OTM meaning out of the money trades. Now, what is the lowest max risk for the strategy we're going to be talking about? $4.20. That's your total risk, the lowest. I mean, if you trade one contract at Cantor Exchange, that's, you know, round about your max risk if you're starting with one contract. Now, today we're going to be talking about some things that how can I put this nicely? Gamblers in Vegas use this method all the time and lose their houses because if you don't do it properly, which I'm going to talk about the proper way to do it, you are going to totally kill yourself. Now, there's a thing called the gambler's fallacy. The gambler's fallacy is a mistaken belief that if something happens more frequently than normal during some period, it will happen less frequently in the future, or vice versa, basically. And the redneck version of this is if you take a coin and you flip it, it can land on heads 10 times in a row. Do not, whenever you're trading, do not double up. You're going to lose everything you've got. It's called martingale. If you double up on every loss, that's a no-no. And I've said this time and time again, but new traders often do this and they end up blowing accounts out. So, and why? Because what happens in Vegas doesn't always stay in Vegas. I don't know why I did this, but me and my son went to Vegas last weekend and got him with a picture of Dr. Evil. That is awesome. Okay, enough of that. What is stacking? Stacking is the act of increasing your OTM or out of the money contract in the preparation of an overall win. Now, it's not just one trade. It is a series of trades. Let's pretend you place a trade with one contract and it's a winner. Well, this is an overall win. You won your trade. So you can say, oh, look, I placed this trade and it's a winner. What if you place one trade and it's a loser and then the next one is a winner? Well, if you're trading out of the money and you're doing it for, you know, I don't know, 20 cents, $20, whatever. If you do that, then it's an overall win. Your first one was a loser. Your second one was a winner, but you won more to make up for your first loser. And the same thing if you do three trades. Your first two can be losers. Your last one can be a winner, so it's an overall win. And you can do this up to like 5 times. As long as you're trading OTM contracts, you can stack or add to your trade series. I'll show you how it works in a minute. But you cannot do this with ATM or ITM. You possibly could with an ATM if your probabilities were really high, but do not do what we're getting ready to talk about with ITM trades because you will lose your money. Okay, and this is not martingale. This is calculated strategy. You will stop if your strategy does not pay off within a set number of trials. What is a trial? Here's another definition. A trial is like a series of trades. If you place a trade and you lose it, you're not done. You lost that trade. You continue to trade the series or your strategy within the series until your profit or loss has been attained. Now you've got an overall max loss and you've got a profit. Your max loss is for the total series of trades. In other words, your trade is not just one simple trade. It's a series. It can last throughout the day, throughout the week, whatever. Now, how do I stack my OTM trades? Well, let's talk about that. We'll look at some charts here in a minute. Let's say I buy one contract for 20 or so, whatever, 20 cents, $20, whatever. On Cantor Exchange, you can trade an OTM contract for 20 or 30, somewhere around in there. Now, if it's a winner and it expires profitable, your series is over. Now it's time to look for another trading opportunity. So you are a winner. If your trade that you paid 20 for is not profitable or expires worthless, you could go ahead and take the next trade for 20, also. So let's look at it. Let's say you take 2 trades. Now, if the second trade wins, you're an overall winner because you lost 20 on your first contract. And if you're risking 20, you made 80 on your second contract for a total of 60. You won 60 from the 2 trades. Now, what happens if your third trade, or if your second trade lost as well? Well, if you're doing this and your first trade lost 20, your second trade lost 20, and your third trade won, well, it won 80. So your overall win would be plus 40. Again, if you continued and your first 3 trades lost, you can still come out a winner. This is the beauty of OTMs, because you can risk just a little bit to try to profit a lot. Hang on just one second, guys. Okay, I'm back. I had to get a sip of my coffee there. So your first 3 trades lost, you lost 60, you're kind of irritated, and you're like, oh man, this is not working. And then you place your 4th trade. Even if you're sitting there and you're like, oh gosh, I'm going to lose this 4th one as well. Well, that's a wrong attitude to have, but you go ahead and do it and you win 20 overall. Now, but what happens if all of these, let's say you lost 7 in a row, whatever, and you won on your 8th one? How do you come out ahead when this happens? Wouldn't it be an overall loss? Kurt, no, these are not based on $100 contracts. They're based on $1 contracts on Cantor Exchange. Cantor Exchange allows you to trade with $1. Nadex allows you to trade with $100 per contract. So there's a big difference. A lot of people can't do what I'm getting ready to talk about on Nadex because the contracts get so large, but not as large as something called Martingale, which is a big no-no. We're getting ready to get into the math, so hang on just a second, Kurt. Okay. Wouldn't this be an overall loss? And that's a big fat no, because you need to employ something called money management. Money management as well. Money management plays a huge role in trading. Now, let's say with each loss, after a certain point, you'll begin increasing your risk up to a pain threshold. Now, what is a pain threshold? Another definition. What is a pain threshold? Pain threshold in trading is that point which you have endured so much pain, you just want out. You want to take your loss. Just get out, be done trading for the day, whatever. What's the pain threshold? Remember that $4.20 we talked about whenever we started this little presentation? That's the pain threshold for me, for one contract. If I'm trading more, let's say I'm trading, starting with 10 contracts, my pain threshold would be $42. Or if I'm starting with, $100, it'd be $420. Wait, is that right? No, that math is wrong. My pain threshold right now is $4.20 on Cantor Exchange. So your number is somewhere. You've got to come up with your pain threshold. Now, before you place your trade, you have to know what that pain threshold is. How much am I willing to lose? And we're going to look at the mathematics behind it in a second. Let's say the hypothetical pain threshold is 10 losses in a row. Or that's supposed to say 9, so pretend it's 9 because everything else I have is 9. We need to now figure out a money management system that gives us an overall win at trade number 2 without risking so much. Because if you follow Martingale, you're going to see that if you try to double up 10 times in a row, it's like $10,000 in the hole to try to make $1. It's stupid. You don't want to do it. So here's what it looks like. You start with 20, 40, 80, 60, and then before long, you're risking $10,240 on a trade to try to make 20. But what you don't know is that you have to take this 10,000 plus the 5,000 plus the 2,000 and add all these up together. There's your pain threshold, and that's what you can lose. That's a big no-no. Don't do that. It kills everybody that tries it. Can martingale work? Well, it does work in most circumstances, to be perfectly honest, but you will. It's not a matter of if. You will blow out your account at some point if you begin doing martingale. There's no way around it. Casinos have built entire businesses on trying to sucker people to do this martingale thing because it makes them a lot of money. Makes the casinos a lot of money. Same thing in trading. A better way to do this is something like this. If you're going to trade like a series of 10 trades in a row, and your first trade is like 20, your second trade is 20, and you're going to let them expire, you can increase a little bit. You got your first 4 trades are 20, your next one is 40 for a few times, and then 60, 70, 90, and then stop. If you lose 10 trades in a row, you're out, and you're out 420, which is either $4.26 or $4.20 if you're trading on Cantor Exchange and you're trading one contract. Now, regardless of however many contracts you want to trade, you need to know if there's liquidity, and you also need to know you can use this method or any other method. Just make sure your math is correct. So what's the payoff? Well, the payoff, if you were to win your first trade, you would win 80. You risk 20, you make 80. Okay, if you win your first trade. However, if you lose your first trade and you win trade number 2, your overall win would be 60 because you lost your first one, you lost 20, then you made 80, which makes 60. If you lose your first 2 trades and win your third, then you make 40. If you lose your first 3 trades and you win number 4, you would make 20 overall, and so forth. Your 5th trade make 80. Now on trade 7, you're going to break even. Now, why didn't I go in there and make that into some number to profit? Well, you can do the math to do this. We're increasing a little bit on OTM trades because the majority of the time it's not going to go to trade number 10. It's just not going to do it. That's the max. I'm going to show you how to see the max in a minute. But why would I risk 420 to make 20 or 30? That just sounds kind of absurd. But think about it like this. You're not risking 420 on each individual trade. You're only risking this if the trade series goes all the way to 10 losers in a row, which can happen, and it does happen. But you're only risking between 20 and 90 on each individual trade. Now, the stacking model max risk is 420. The Martingale model max risk it's not 10,240. It's actually, where's it at? It's up here somewhere. It's actually 10,000 plus 5,000 plus 2,000 plus 1,000 plus 640 and so forth. So it's a lot more than 10,000. That's just on your last trade. So you don't want to do Martingale at all. If you're looking at stacking, and we're going to go to the charts now, but if you're looking at stacking, the max risk for all of the trades is 420. Let's go ahead and go to the charts. Okay, I'm going to get a sip of coffee here real quick. Oh, by the way, this webinar is not going to be very long today because I'm just putting it out there straightforward and not deviating a whole lot. Hang on. Okay, so let's say first you have to find a strategy. Well, I'm looking over here. I've got a strategy that wins about 59% of the time for an OTM that is about 5 pips out for an hour expiry. Well, if it wins 59% of the time, what is the max lost, the max number of trades it's lost? Well, over the past 591 trades, it has lost a maximum of 9 times in a row, somewhere between, trade number 1 and trade number 591. So I do know that the max it has lost so far is 9. That's less than the 10 that I allotted myself. So hypothetically speaking, because I did not place all these trades exactly like I'm getting ready to tell you, but hypothetically speaking, had I placed the trades for the past 591 trades, every single series would have, and you know, in trading, it's very would have been winners. When I say would have, could have, should have, there are things that did not happen, but you know, they could have. So I just want to make that perfectly clear. So if we're looking at two charts right now. We're looking at MT4 and my software from TraderBot Marketplace. This is called the Probability Tool Suite. And then we're looking at Cantor Exchange. Now, if I want to trade this way, I want to trade off of Cantor Exchange. I don't want to trade with Forex or anything like that. I want to trade off of Cantor Exchange. And I want to go in here and I want to buy or sell OTM contracts, out of the money contracts. It's contracts that don't cost 50. They're 50 or less. Ultimately, I want to get them for, you know, 10, 20, 30. That's what I ultimately want to get them for. I do not want to trade this method with ITM. Does everybody understand the differences between OTM and ITM? If you do not, let me know, because you need to know this in order to proceed. So I see right here that this trade is a loser. It's the last trade. The one before that, it was a winner. I can see that because it closed down quite a bit. I can read that. The trade before that was a winner on what I call series number 1, you know. And I call it series number 1, and that one would be series number 1 because if the last trade was a winner, you have to start the series over again in order for this to work properly. So if I had increased my trade size to like 40 or 60 or whatever, and I won, then I would start over back at 20. Okay. And the next trade was a winner as well. The signal comes out at the open of the bar. There's a big old arrow right there at the open, and it expired down here. You know, I got to show you something funny. I was confused there for a second because do you see this line right here? It's on this bar right here, and I saw it moving up and down, and for a split second my brain tried to tell me that this bar right here was the bar in play, and I was like, what's going on? So because they're identical prices. But anyhow, so if you look back through here, you can see that was a loser. You can look back and see, you know, what was winners and what were losers. That was a winner, that was a winner. So I would look back through here and try to find the time that I lost 9 in a row. I'm not going to do that today, but I know over the past 591 trades, it has lost a maximum of 9 in a row. Now, let's say I want to trade on here. Here's how I would do it on Cantor Exchange. I would set this thing to give me an alert on MT4. It's going to give me an alert on my phone, on my mobile app, whatever. When I get that ding, I'm going to come over here to Cantor Exchange, which I have the platform already open on my computer. I have it open all day long. I'm going to come over here. I'm going to make sure, number one, I'm going to make sure that the chart is on the right, whatever I'm looking at. I want to make sure that the expiry is correct for whatever I'm looking at. You know, right now I'm looking at an hour out, which I do not have a signal, by the way. So can't trade that. But I want to make sure those two things are right. And then I want to look at the OTM contracts, buying or selling, whatever. And right now, price is at 116.571. The next OTM contract up, which is 40 minutes out, it's only 37. Well, it's 41 now because price moved a little bit. But it was 37, which is a little bit more than I want to pay for this type of method, unless I do my math a little bit differently. But it was 30 a few minutes ago. I'm going to rewind the tape and check that out. So if I can get one for, you know, 20 or 30, somewhere around there, that's what I'm looking for. I don't want to pay 40, 50, 60 for this thing, because my payout, I'm going to have to increase my lot size a lot more than I should. And I don't want to do that, because when I increase that, I'm going to be increasing my risk. I want to keep my risk as low as possible. And with OTM trades, you can do this, and you can add to them, because you're only risking just a small amount. And whenever they pay off, well, they pay off big time. Even on trades that they don't pay off. Check this out. Let's take let's see. Let me try to find a trade. I don't know. Just take any one of these. Let's take this loser right here. Now, I know there's a down arrow here and it lost. However, pretend there's no signal right there. Had somebody taken a long trade right there, well, it went up so much that there is total room for profit. If you're placing a trade at 20 and price just shoots to 95, get out. Get out of that trade, sell it off to somebody else. So there's a lot of opportunities for OTMs, whether it be on the Euro USD or any other asset. What you need to know is how often something happens. Going back to the few previous webinars we have done, you have to know how often something happens. Now, just by looking at Cantor Exchange, I can do something called a bar run. I can count the number of bars. After X number of bars in the same direction, what happens to the next bar? For instance, what if I want to do a quote-unquote 3-bar run? Well, I know you see right here, 1, 2, 3. There's 3 bars, and then the next one comes down. Can you tell me right now how often a 3-bar or a 4-bar run pays off? Just by looking at the chart. Sometimes you need a little helper, and that's what I've got. This is a 4-bar run. So I know that every 4 bars on the Euro USD, every 4 bars in a row that go the same direction, I know that they've got a payoff that the 5th bar right here is going to win about 40% of the time OTM. And that's how I know that. And that's basically what I've got for today, guys. Look, if you're trading OTMs, you can stack your trades and risk a little bit. You don't have to go all the way out to 10 trades, you know. You don't have to do that. I don't think I have ever in my entire trading career have went all the way out to 10 trades. It's not happened. I lost 21 trades in a row one time back a few years ago. And that's the only time that's ever happened, and hopefully it's the only time it will ever happen again. But my risk was small, so it was fine. So flukes do happen. However, the vast majority of the time, and over the past 591 trades, this has not surpassed 10. So it's all hypothetical until you get in there and start doing it. You know, I have a question. When you're stacking, are you buying or selling? Which works best? Okay. There's a little thing that I do not like with MT4. It only shows the bid price. Now, the bid price, let me get in here and show the bid price. Well, I'll show the ask. It's showing the bid. You see these 2 prices here? One is the ask, which is the upper. One is the bid, which is the lower. What you see on Cantor Exchange is the spot price. Now, I usually like to buy. If I'm trading from my signals, I usually like to buy because I get a little bit more of an edge. It's like the house edge if you're playing roulette or something like that, which I hate to use those two together, but I do get a little bit more of an edge due to the bid-ask spread, so I like to buy. However, I will sell as well. I prefer buying, but I will sell. It is pretty much the same. You know, I do get a little bit better, a little bit more of an edge buying. Now, I will tell you this. If you're trading 5-minute binaries using my signals here or the tool suite, you better be buying only because you get a huge edge in your favor if you're buying only. If you're selling, yeah, you know, the edge can be taken away. So, but hourly, it's fine. Buy or sell. 5-minute, you know, if you're trading strictly with Cantor Exchange, buy or sell, I don't care. If you're trading with my signals, you have to be buying only. But that's for another day. So over the past, I don't know, 590 whatever, it's not went to 10 in a row. So let's look at an example here. I want to look at this one bar, and I want to find out what happens at the close of this bar. What are my probabilities that the next bar is going to be green or red? Do you guys know what the probabilities? If anybody can give me the probability right now, go, because I'm going to give it to you. Okay, now the probability that this bar right here is going to close red or green or up or down. Okay, I put in what's called a 1-bar run, which means we're only taking this previous bar right here into consideration. Now, since this previous bar is green and the one before that was red, that's called a 1-bar run. So this bar right here has a probability, and hang on just a second, of 37% of closing at the next OTM level, which is right here. Okay, you see this blue line right there, right here. Let me draw a line. Okay, there's the line. Now, 37%, it's got a 37% probability of closing below this line, which means it's got a 62% probability of not closing below this line. So based upon these parameters, I know that over the past 2,677 trades, it has had a max loss amount of 21 trades in a row where it did not close below this line. So, you know, you can take all these stats into consideration, but I would not trade a 1-bar run. It's just too many trades in a row that did not close in my favor. I don't like 21 trades in a row. I like to keep them below 9, and actually below 5 is great with me. I did one of these webinars here a while back where the max loss was 5 in a row. So just know your probabilities, because if I know that I've got a 37% probability that it's going to close below there, but a 62% probability that it is not, and price pulls back to it, well, that starts a whole new thought pattern. Well, what if I wait for a pullback and then buy it? But guess what? That's not today's topic, so I can't do it. But based upon this, on a 1-bar, I would not, on a 1-bar run, I would not trade it. I like mine to be at least 3 or 4 bars in a row. And you can see this all the time on Cantor Exchange. Like, here's a 3-bar run. 1, 2, 3. The next one was down. Here's a 3-bar run. 1, 2, 3. The next one was down. Where's another 3-bar run? Here's the 3-bar run. 1, 2, 3. The next one was down. Here's the 3. 1, 2, 3. The next one was down. Can you see what I'm doing here? I'm going and analyzing the market on what happened historically. Now here's a 3-bar run. 1, 2, 3. The next one was up. That was a loser. Here's another one. 1, 2, 3. The next one, well, if you're trading out of monies, it's a loser. But so that technically that's a loser as well. So you got to go in here and know your stats. 1, 2, 3, down. But what if I want to know? Okay, what is my probability of price going 3 bars and then closing down? Well, let's check it out. I need to find out for myself because I can't tell you unless I look at it. 3-bar run. Okay, with Cantor Exchange strikes, there's a 40% probability of price closing. Like if I'm going to take a picture. I'll take a picture here. No, that's not the picture I want to take. Hang on a second. Okay, look, you got 1, 2, 3, and then the next bar is down. Well, technically, I've got a 40% probability of it closing below the 5 pip mark down here, and a 59% probability of it closing above this area, which is right about here. Let me make sure. What's the next strike down. $30. Okay, 35. Where are we at here? Okay, no, my bad. It has a 40% probability of closing like right around here, this area right here. So anyways, if we're looking at in the money, it's got a 69% probability of closing below an area above there. But again, that's a topic for another day. What I'm trying to tell you is you have to know your probabilities. You have to know how often something happens. Okay, question time, questions. Bring on the questions. I do want to make an apology to a guy. There's a guy, I don't know if he's in here. Let me see if he is in here, because I dropped the ball on something this past week. Okay, he's not in here. Something on my website stopped working, and I was giving away some free indicators and stuff, such as local time generator and whatnot. They stopped working, and I have to redo that. So if anybody wants the free indicators that I give out, just let me know, and I will get them to you. Scott asks, the bar run indicator can only be used on MT4. Well, mine can only be used on MT4. I will tell you about a conversation I had today. I don't know the future of automated trading with Cantor Exchange. I don't know that yet. I know that there's ways that people can connect to the exchange. I'm trying to connect to the exchange. That does not mean that that I can allow everybody to use it. That means that I'm trying to get connected. If I can get connected, then I know how to advise other people on how they can get connected as well. But there's like an application process, yada yada. Anyhow, if I can get the stuff to work properly with Cantor Exchange, like interconnected, which I have not been able to do yet, but if I can get it to do that, then it will work on MT4 and on Cantor Exchange. Right now, it just works on MT4, works on MT5 as well. But I'm trying to connect both of the platforms. The only thing I ever use MT4 for is just signals strictly. I never trade on it except for Forex, but that's a different ball game. So I'm working hard and heavy, and AJ's putting in overtime, I think, answering all my questions or whatever. I'm trying to get it to work with Cantor Exchange as well. So we'll see how that goes. And guys, that's pretty much the webinar for today. Did everybody understand the concepts? Oh, look at there. AJ said that I'm great. Wait, Ryan is great. Happy to help. Yes, Ryan is great. He's the most wonderful man on all the earth. You know, but I know I'm just messing with AJ. AJ is really great. He will help anybody that has any questions with anything whatsoever with Cantor Exchange. Give him a call. Again, you can let me get his phone number and address here. Phone number and email address. There we go. AJ Grossbart at Cantor.com, 212-829-7114. Give him a call. Okay. As always, I'm going to take me a break. If you got any more questions, put them in the chat. Otherwise, the webinar is over. Or I don't like calling it a webinar. I like calling it a workshop. But in order to be a workshop, we have to work together. So if you guys want to go over like a little scenario or whatever, let me know. I'm here to help. But I can't unless you communicate with me in the chat. So, all right. That's all for now. You guys are great. Thank you for being in here, by the way.